Aloha, this is George Kriske with Honolulu High Five. In a different segment, we talked about vacation renting your property. And we talked about residential zoning rental restrictions, which are normally 30-day minimum per tenant. And we talked about house rule rental restrictions, which are sometimes even 60 days or 90 days minimum per tenant. Regardless if you rent your property short-term or long-term, we need to talk about the tax obligations that come along with collecting rental income in Hawaii. Number one, on all gross rents received, you have to pay 4.5% general excise tax. This is on the gross rent received, not on the rent after expenses, minus expenses. It's on the gross rent received, 4.5% general excise tax. Now, if you rent your property on a shorter term basis, in this case is defined as 180 days per tenant or less, 180 days or less per tenant, then you're obligated to pay an additional 9.25% transient accommodation tax. Those taxes are due either quarterly or monthly, depending on how much rental income is generated. And so there's a formula for that. And they are due on the 20th of the following month after the collection period. So 20 days to send in the taxes. With these taxes, if they're not received by the 20th days, there are hefty penalties, and there's late fees and interest that accrues on it. So it's important to be timely on those payments. And it's important to be accurate on the calculation of those payments. Let me explain. There is no statute of limitation with general excise tax or transit accommodation tax. Means if you ever get audited, the state may require you to open your books going back 3, 5, 7, 10 years, 15 years, whatever it is. So make sure you're accurate with your the taxes that are due. The state has different mechanisms to check also on rental income. For example, did you know that as a renter in the state of Hawaii, you get a $50 tax break if the renter provides the contact info for the landlord. So if you don't report it, your tenant might be reporting to the state of Hawaii that he's paying rent to you. So make sure you pay the appropriate taxes. Now there's other requirements that we need to talk about. An out-of-state landlord is required to have a local property manager, a local contact. There always needs to be somebody here in the state that can assist for any emergencies and so on. And there's additional reporting requirements that even involve associations. If you rent out your condo in a high-rise condominium building, the association is required to report you as a landlord if the association is aware of it. And in fact, nowadays the association could be fined if they don't report. So this is all an effort by the state. It's all about tax revenue for the state that the state may have been missing. So I stress the importance of this, and so here you have been informed. And with all tax matters, always check with your favorite qualified tax professional to get the full details of the latest legislation and how it affects your individual situation. And that's it. Until next time, aloha.